Good afternoon. Hope all is well. I just want to shoot a quick video here to do an update, sort of like a midweek, maybe. You can call it that, update on some pairs. Not going to go through all of them. I want to just use this as a teachable moment to not only review the triple arrow, but more importantly, our trading plan and how we use the triple arrow system for maximum results. And I just kind of want to show you some of those pairs. We just kind of go through some of them and just see what is actually happening, what's actually happening. So here we are on Euro USD. Euro USD was definitely one that I had my alert in on. And as you can see, the triples did come in. And when the triples came in, right here, I did not have my alert because if you look down, the MACD had not crossed over or touched my midsection, so I would have waited, right? I would have waited. And now some people that use this system use strictly the arrows, and you can actually do that. I highly discourage it, but you can actually do that because it is very accurate in the direction that price is going in. It picks up that volume and that movement pretty accurately. However, because price is king and we don't control price, you put yourself in a position for more drawdown than you really have to have. It's not the best quality trade. Not saying that you won't make your pips. Eventually you will, if your account can sustain the drawdown and different things like that. Not the best quality trade, okay? And so that's why I don't trade the triple arrows that way, and I don't teach it that way. So in this case, we would still not have gotten in the position because one, price is above the 50. So we know that price is in bullish territory. Two, price is above the 50 on the MACD, is above that center line. So again, bullish territory. And so we would have waited, right? So you all know the trading plan. For those of you that are new to the Telegram group, the trading plan is in the Facebook group, the files section, and it's also in the Telegram as well. And so you have that. So the alert came in right around in this area here. And once the alert come in, we go back, of course, to our chart. And the first thing we're looking for is to make sure that we have our triple arrows. So the triple arrows, we look left. Yes, we have our triple arrows. Great. Then what we want to make sure is that the candle closed below the 50 moving average. And it did. Great. Another thing that we really want to take note of is what candle closed. Was it a bullish candle or a bearish candle? In this case, we're selling, so we're looking for a bearish candle, correct? Well, if you have a bullish candle, which is likely, you could very well have a bullish candle that closed. One of the things that I would recommend is, one, you want to take your position on a bearish candle, right? So you want a bearish candle to close. That's what you're looking for. And so I'm going to tweak our trading plan to incorporate that. Now, what you can do, however, because I analyze on the hour chart. So if you have a bullish candle that closed, then what you want to do is you want to drop down. You want to drop down to your lower time frame. And what you're looking for is for a bearish candle. You're looking for a bearish candle because you're selling. So I'm going to put the vertical line on this candle because it was around in this area. So this candle, there we go. So I got the vertical line on here. Now remember, everything that is happening on, let's say, the hour chart has already happened on the lower time frame. Okay, so if you're on the hour chart, and like I just put a vertical line on this bullish candle that closed, that bullish candle, even though it's small, activity is taking place on the lower time frame. So it's like looking through a magnifying glass, right? So it's like us putting a magnifying glass that allow us to look inside of the candle. It's like, for instance, it's like a CAT scan or MRI. When we go through that machine, that the technology allows the inside of the area to be illuminated, where you can look past or through the outer body, and you can actually see what's going on the inside. That's the exact same thing that happens on the smaller time frame. So whatever's going on your higher time frame, it has already happened or happening. In this case, it happened because this is not the active candle, but it has already happened on the lower time frame. So with that being said, we're going to drop down because we're looking for a bearish candle. That's what we're looking for. So, because I want to see what bearish selling activity is going on inside of this little candle. And when you drop down to the lower time frame, that's what it allows you to see. So I hope that my analogy really cleared that up, because that is something, that concept, it took me about a year to understand that. Every time it was explained to me, it just made my head hurt. I couldn't get it. I'm like, how is that possible? You drop down to the lower time frame. I'm like, oh, you're killing me right now. So I don't know when the light bulb went off, but it did. And so hopefully, my analogies will help you, and you don't have to, go as long as I did before you understood that. So let's go down to the 30-minute. Let's go down to the 30-minute and see. Let's follow this vertical line and see what's happening on the lower time frame. Okay, so here's our vertical line on the hour, right? And it lines up with what? A bullish candle. Everything still looks good for a solid sell. Don't get me wrong, but I like my confirmations, because we're looking for quality. Okay, we're looking for quality. If we start off saying taking chances, or making little adjustments and overlooking certain things in our confirmations, then that behavior will magnify, and it will get to a point where it will bite you. So if we start off doing a particular thing a particular way, and we stay with that, then we always keep ourselves in the best or the highest probable winning position. Because how you do one thing is how you do everything. So we want to have a set of rules under which we operate. All right, bullish. Okay, so let's drop. We're looking for a bearish candle. Let's drop to the 15. Follow this vertical line on the 15-minute chart. Okay, come on. All right, vertical line here. Where is it? Bullish. Bullish. Okay, we still good though. We still under, but still, we got a bullish candle. We're looking for a bearish candle. Let's drop down to the 5-minute. That's what we're looking for confirmation to get in the trade. Come on, computer. Okay, there we go on the 5-minute. Bam, 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 bam. What do we have? A bearish candle. That's what we were looking for. That's our entry candle. That's our entry right here. So we enter the trade. So you see how that works? Quality is what I'm after. Quality is what I'm after. Some may say, well, shucks, you could have took that. It was good. Well, we don't know that, because only thing that we know is what happened in the past. We don't know what's going to happen in the future. And you don't want to start taking those type of chances. And also, when you are working with large lot sizes, you ain't trying to have drawdown. You're trying to have as little drawdown as you possibly can, because when you're dealing with large lot sizes, when you start getting to standards, you know what I mean? A 10 pip, 20 pip drawdown on a $30 lot hurts, right? It hurts, even the $10 lot. So that's the goal. All right, so we got our confirmation. So we go back to the hour. We go back to the hour and we go ahead on and take the trade. We take the trade. So yeah, it went back up a little bit more, but we got our confirmation. Now, this is why I say there's no perfect entry. It doesn't exist because price is king. We don't control price. We don't control the things outside of the external things that impact price. World news, world economics, brokers, they impact price. Those types of things impact price. So we don't have no control over it. So we can only rely on our confirmations. And if that's all we can rely on, then we want to make sure our confirmations is as solid as we can possibly make them. Okay. So I feel like that's solid. I would have taken it and not worried, basically, right? Take the trade at this point here. And clearly, as you can see, you would have made your pips. You would have made your 20 pips right on this candle right here. If you would have used your previous support dots, you could have taken your pips down to this point, even down to this point, okay? And you would have been fine. So you would have gotten 34 pips roughly if you would have done that. And you would have been okay because all your other confirmations, it lined up, okay? Remember, price is always going to go to a certain point and then it's going to pull back. And that's where we are right now. I talked about this for sure on my YouTube channel. So check out those videos. And I talked about price movement and how price behaves. And price always impulses in the direction of the trend. And in this case, it's a bearish trend. So this bearish move is an impulse. And then after an impulse, it always corrects, meaning it goes in the opposite direction. And then after it corrects, it continues back in the direction of what? The impulse. And so you can use your previous support and resistance dots as well to determine how far back it's going to go. How far back it's going to go. Your 50 moving average also serves as support and resistance. And it's a very strong support and resistance that the 50 provides. And so if it breaks the 50, this is another way that you can determine. If it breaks the 50 and close, and then it retests the 50, then it's likely to go back up. It's likely to go back up. Now, same thing applies if we're selling, it prices down here. If it touches the 50, but it doesn't break it and close, right? In other words, it could go through the 50, but if it closed below the 50, then it will likely head back down. It will likely head back down, okay? So that's how that works. You can go above the 50, come back down and close, retest, and drop, right? Or it can go above the 50, close. See, the closing is the operative word here. Close above the 50, retest that same 50, and then it will likely go back up. Okay? That's market structure and all of that good stuff. We can certainly learn that, but just use your eyeball to gauge what's happening in addition to the previous support dots. And that will help you to determine how far your pullback will likely be. Now, I am going to begin to introduce the Fibonacci because that's another very, very strong indicator that I use, and it's very, very strong, but not on this video. Okay, so those are some things that you can do. Okay, so right now it's in a correction. So if you wanted to get into this position, you would not do that right now, right? You would not do that right now because it's going against your trend. It's going against your trend. Now, how I determine an entry point after the triple arrow has already, our confirmations and everything has already made, the move was already made. You still can get in I use my engulfing candles as my indicator as to when price is going to reverse back. So you can do that as well. I'm going to have to do another video on that too, because that's a video in and of itself. But let's just use what we see here. Trade what we see. Okay, just trade what we see. Okay, so that's Euro USD. Okay, let's see what USD Chef is doing. USD Chef. USD Chef, come on and populate for me. Okay, so we have our triples here. It's bearish. I'm sorry, bullish. Bullish triple arrow it came in here, and our alert would have happened right here. Okay, would have happened right in this area here. So that is this candle, this little red candle right there. Let's move that over to there. Okay, so that's where the alert, it lines up with the alert. So the alert went off, come back to the chart, look left, you're looking for your triples. Do I have my triples? Yes, I do, right here. Okay, great. Now we're waiting for the active candle to close. When you came, it was an active candle, so we're waiting for that to close. And we want that to close above, in this case, the 50 moving average, right? Because we're buying. And we want that candle to close bullish. We want that candle to close bullish. So this candle closed bearish. So what are we going to do? Let's drop down. What are we looking for? We're looking for a bullish candle. So let's drop down and follow this vertical line on the lower time frame to see what it's doing there. Okay, I just saw that. I just saw it on the 30. I just saw it on the 30. Let's go back to the hour. Did I click off of it? I'm sorry for my computer. I have to give it a rest. Okay, so here's the line. Okay. Here's the line right here. Alrighty, so let's go to our 30. Let's go to our 30. Here we go. This is our 30. All right, it's bearish. It's bearish. We're looking for a bullish candle, right? Now, what do we see on the 30 though? We see that momentum price, bullish activity is above the 50 now. So we know we're in bullish territory. And the MACD has crossed over on the 30 as well. It has crossed over on the 30 as well. And the blue line, MACD line, is above my red, right? So we're clearly in bullish territory, right? A lot of people would have taken the trade. And again, you wouldn't have been wrong, but I'm looking for the best quality trade that I can get in, because that's just the mode of operation I want to operate in. But would you be wrong if you would have taken the trade? No. But let's look for our bullish. Okay, so let's drop down to the 15 and see if we can catch a bullish on the same candle. Because basically what I'm doing is I'm putting an X-ray. I put that candle that is on the hour that closed bearish. I'm putting that candle under a CAT scan right now. I'm looking on the inside of the candle for what? Bullish pressure. That's what we're doing when we drop down to the lower time frame. So on the 15, what do we have? Bearish. We still got that bearish going on, right? I'm looking for a bullish candle. So let's drop down to the 5. Let's drop down to the 5 and see what's happening on the 5-minute candle. Okay. And where are we? Here we go. Boom! It's small, but that's okay. We have a bullish candle right here. That's all we needed as our confirmation that we are going up. We're going up. We have other confirmations too, but that's the last one. That's my entry confirmation. And the 5-minute, by the way, is a strong entry confirmation. I'll do another training on that. But the 5-minute gave it to us. So now I'm just going to put my position in at that point. I'm going to put my position in. Go back to my hour. and I am taking the trade. I'm taking the trade at this point. Okay. So I'm in that position, and I'm going to take that up. If you're doing a 20 pip strategy, take it up for 20 pips. If you're going to use your previous resistance dots, then you do that as well, and just look left, and you can measure your entry between your entry and the previous dots. You want to try to get at least 20, and if that gives you more, great, then take it to that point. That's not a problem, and we would be clearly with the major money, clearly, right? And it reached this point, and now what is it doing? It's just correcting itself. That's all. It's correcting itself. So when do you get in? You want to definitely get in when price is above. If you missed the move, and you want to get in, the first thing you want to do is make sure that price is above your 50. If you're buying, it needs to be above your 50, and you're looking for an engulfing candle, a bullish engulfing candle. And I'm going to give you some material that's very valuable that you want to study and read. After this video, I'm going to drop that in the group as well. It's the Candlestick Bible, guys, and you want to eventually print it out, and it's a Bible, and it's definitely going to help you to determine different entry candles. It also helps you to determine what price is doing based on the candles. That's a whole nother trading strategy. So you want to definitely treasure that, and I want to give that to you as just a token of my appreciation for you all rocking with me in this Telegram group, and we're going to win together. So that was USD Chef, right? And let's see what GBP USD is doing. Let's see what that's doing. And then I got 5 more minutes, and I'm getting off. Okay, so on GU, we have our triples and I missed this move actually, so I'm waiting for the continuation. Came in our alert right around in this area here, right? So this candle right here, it closed as a bearish candle. It closed below the 50. Then bam, I would have just got in at that point, and I would have taken it for my 20, or you can use your support dots here as well. So if you would have did it right in this area, you would have gotten you about 69 pips or so, right? If you would have used these dots. So good stuff. The triple arrow works. The trading plan is a great complement to solidify your entry, right? To give you the best possible entry with little to no drawdown. Okay, so odd USD. What is odd USD doing? We got our triples, but once we would have gotten our big arrow, the first thing we would have done was put in our alert, set your alert. So we did. The alert came in right around in this area. It lines up with this candle right here. It closed below the 50, and it closed as a bearish candle. That's it. Take the trade. I don't typically drop down at that point. I just take the trade, right? And you can certainly do that. You could have taken it for the 20, or you could have used your support dots right here. This one right here, you could have used that. Had you done that, that's about 42, 43 pips, right? So good stuff. So you see how using the confirmations, the trading plan, that's what really, really solidifies your position. And you would have gone straight into profit, my friend. And if you would have experienced any drawdown, it would have been very minimal, very minimal. So this is a great way to get your pips, go in profit, get your pips, and you're out. And that's a trader's dream. That's a trader's dream. So that's odd USD. Let's see what Euro GBP is doing. And triple arrows is true to form. It's true to form. It's true to form. If we follow that along with our plan, we should be fine. We should be fine. Okay, big arrow came in. I put my alert in. The first thing you want to do, you want to put your alert in at your 0 or your midsection of the MACD, right? And alert came and went off right around here, okay? Right around in that area, which was this candle right here. Look left, you have your triples, check. Price closed above the 50, check. And it closed as a bullish candle because we're buying, check. Then you could have taken your trade. You could have taken your trade at that point. So right here, 20 pips, you would have been shy of 20 on here. You would have got caught. You would have got caught right there. And I'm glad that I'm showing you this because this is just the realities of trading, right? No plan is perfect 100% of the time. It's a probability, and you want a high percentage win rate, obviously, than a lose rate. And so this would have been one that would have caught you. This would have caught you. And a lot of times what I do is when the candle closed, I measure my the close of the candle. I put it on the body of the close of the candle to the previous dots. Okay, my previous dots. That would have gotten me 10 pips if I would have gone to that point. Also, if I would have decided to take it up, that would have taken me to 25 pips. This is what you want to look for. Everything on the triple arrow system tells a story. So you want to look at your trend lines as well. You want to look at your trend lines. Now, I'm looking at this trend line and I can clearly see that it is compressing. It's small. It's not a wide, price is pretty much contained, bouncing off the top of this trend line, and this candle that closed is not too far from the trend line. Oftentimes I measure the distance from the close to the trend line if the trend line is small. And I would have probably did that on this one. And this is 24 to the top of the trend line. That's 24 pips. So not saying that I wouldn't have gotten caught, but these are just some other things that I would be looking at to determine if I want to do 10 pips and drop my position 2 times. Because I do that sometime as well. If I feel iffy, then with the 20, based on other things that's making me a little questionable, then I just go for 10 pips and I drop it 2 times. You can make that as a norm too. If you just want to make that as the way that you're going to get your 20, is to drop your position 2 times and you go for 10 pips each. You're good. I mean, you're going to be in and out of the market even faster with the same amount of pips that you were going for and the same amount of money that you were going for as well. So, all right. So I think I talked enough. Wanted to give you some golden nuggets while I was doing this training real quick on the trading plan and how effective it works with the triple arrow system. And I'll be coming back with some other training as far as those engulfing candles and how we use engulfing candles to determine our entry and how far price is pulling back and all that good stuff. So that's going to be our next video coming up soon. Hope everybody is doing great. Hope you're absolutely using the trading plan with the triple arrow system so that you can get your profits consistently. And lastly, I will be putting that bonus in the group for you. Make sure that you save it to your computer at some point, print it out so that you can have it. The Candlestick Bible is phenomenal. Great resource. I'm going to drop that in there for you as well. Y'all have a great one. Bye-bye.